Okay, guys, everyone, good evening. Super excited to be on with us this evening. Hello, guys. Hello, guys. Hello, guys. Hello, guys. Are you joining the call right now? Let's go. Let's go. We are live. We are live. We are live. We are live. Today is our review session. Okay, today is our review session. Come on, let's go. Let's go. Let's go. Are we coming on board? Yeah, we are coming on board. We are coming on board. Okay, so this today I'll be doing a review with us about on market structure, support and resistance, and trend analysis. Just before we move on into zone, for me it's important that everyone really understand, you know, the concept of support and resistance as well as trend analysis. So it's gonna be, I don't think it's gonna be a long class because it's just gonna be a review, and then I'm gonna be giving us assignment that we'll be working on, and we need to really deliver. Okay. To eat, guys. Let's go to eat. So I really hope you can see my screen right now. I really hope you can see my screen right now. So, okay, so you can see my screen right now. You can see it. Great. Great, guys. Great. Okay. 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 Yeah. So let's go. So yeah, do a review of support and resistance again. We talked about uh, uh I told you that in this in on market structure, and we're going to focus on support and resistance, trend and zones. Okay. And over the past few, and when it comes to our decision. Okay, review. Let's go over it again. What support and resistance? What support? What's resistance? So I told you that a moment. I told you support will be that level in the market where prices uh, okay, so it's that area of the price bounces up, or where price goes up. Wait just a minute. I'm not sure. Okay, I think we. Oh yeah, we are back. We are good. We are live now. Okay. So yeah. So we talked about this. Let me clear this. So I did. We said support will always be that price level in the market where price actually bounces off, you know, to the upside. So what that means is that you always have support happens when price is coming down and then gets to a price level and then it bounces off that price level and price changes direction upward. So that area or that level where price bounces upward is called a support. Remember? And then we did say resistance. Okay, I hope you still remember. So this support, right? Or what we call floor. What we call floor. So here we have the support. And then we said that a resistance is going to be that price level in the market where price bounces, okay, off to go downward. And that's a resistance, okay? Prices bounces off that level and then price begins to go downward, and that would be a resistance, okay? So more like this. So we have a resistance here, okay? So also called what? Also called a roof. This is also called roof, and this is also called floor, okay? Now, these are reactions of price at um, key levels of the market. So support and resistance are actually price reactions to certain price levels or to certain price area. Okay, so they happen when a support happens when um, the buyers come to take over the market when we have a sudden rush or a sudden increase in volume of uh, of buyers of a particular currency, so that's what you are see happening here. So what you have here is, you see, price has been coming down. People are selling, sellers are taking control of the market, they are selling, and then they got to a price level, and then buyers, you know, uh, brought in volume, trading volume. So a lot of buyers started buying at a particular price level. So they said buying, and then so there is a reaction. So the buyers reacted at a given price level. So in the same vein, a resistance happens when you see buyers holding sway to a particular currency pair. So a lot of buyers are buying. They buy up to a particular price level, and then you see sellers volume coming. And once you have a seller's volume, you begin to see that price begins to go down. So the reaction is what we call resistance and support. So the reaction of sellers to this buy rally, or what we call bullish rally, at this particular price level is what we call resistance. So we say price hits the resistance level, price hits a roof. Okay. So as traders, we are interested in what happens, in the market. Now, what helps us to identify support and resistance? Like I told you when we were looking at the at this particular topic or concept in trading, I told you that previous reactions in the past. What happened in the past is one way of you determining where it's going to be where is price likely going to react in the future. Where is price going to react in the future? So let me give you an example. So let me clear this, and there we go. So here now I can see certain levels. For example, let's look at this area. I don't know if you can see, but maybe I should increase my stuff. Okay, and change the color so that we can see it very well. Red. So yeah, so we have this guy here. There's the possibility that, you know, we saw price reacted here, right? So price was coming down until when it got there, there was a reaction, and this price level is what? Let me check it. So this like 1.2036 of pound USD. So at 1.2036, there is a resistance here. Why? I'm sorry, there is a support here because there was a reaction. So sellers were selling, and you can see price coming down. You can see, right? Price was coming down. See, price was coming down. When it got here, it hit our resistance here at 1.32, and then it started going up. Okay, it started going up. So now we look at here. So price went up, and then somewhere in this area it reacted, and we can see that price started coming down. Okay, that's why was there a reaction here, because there is a resistance. There is resistance. And how do we know? Because price dropped, pull back when it got to this price level 1.2175. So that's how we know there was resistance here. There was the only reason price retraced or came down when it got to this level here is because this level here is because there was a resistance here. Now, like I told you, don't forget, this is a review class. I told you that whenever there is a support or a resistance and it is broken like this, price is supposed to bounce, right? But if for any reason price breaks through that support, is going to become a resistance. Anytime price goes below a support, that support becomes a resistance, because when next price comes to that level, that is going to bounce back, to the downside. So never forget that. The support here, but it turned into a resistance. Okay, so it's a support at this point. Sorry, let me take that. So at this point here, it is a support. However, at this point here, it is a resistance, meaning that support has become resistance because it was broken. The support was broken in this place. So similarly, when it's a resistance and your price breaking through a resistance to the upside, okay, so more like we have a scenario like this, price is coming up, it's supposed to resist it and come down, right? That's the resistance. But if price goes and breaks through that resistance, when next it comes back to that area, and that area becomes a support, and then it continues to buy. So we say here, this is a resistance, okay, that's turned into a support here. Okay, so resistance here, but it turned into a support. Do you get that? So we are, why? Because price broke through that resistance level, that here. Okay, so whenever you see any area of support and resistance, there's most likely a support or a resistance that had occurred at that price level. So let's look at this scenario here. So we have this resistance here, right? Now, if we look at our left, we now understand why was it a resistance? Because previously, you can see that this same level was a support in the past. You can see our price, and even before that time, that same level was a resistance. So you see what I'm saying? Here, it was a resistance, okay? And then price broke through it, and when price broke through it, it became a support here. And when its price came there, it was a support, right? Eventually, price breaks it here, right? The same way it breaks it here. And the moment price broke through this level, this support here became a resistance again. And that's why here what do you call it? Here it was resisted. Price this level resisted the buyers, and it came down, momentarily. Okay, so always remember that when a support is broken, it becomes a resistance, and when a resistance is broken, it becomes a support. Right? I want you to always remember that. And if you remember, let me take you through some of the things I told you then, that gave you a lot of examples, from way back here, how prices was, how, you could have been trading support and resistance just using this break and retest analysis. Okay, let's look at some instance. Let me start from, let's start from here. Okay, let's start from here. Okay, so look at it. Price went up like this, came down, right? So that means that here, and then, okay. Let me take this again. So price went up, and we confirmed that it went up, and we confirmed there is a resistance here, right? And then it came down here, and then we can see that price. Why do I keep making this mistake? Went up, resisted, came down, a little support, then went up a bit, resistance, then came down, became a support here, went up, resistance, came down, support, went down, resisted, right? Came down, support. Okay, so from here we can see series of resistance. Let me give it a color so that let's color it green, and let's color the support red. Support. Okay, here also we know there was a resistance here because price, basically because price came down from those area. Okay, I'm gonna say, okay, okay, so good. So price turned downward there after going up. The same thing. So it turned downward after going up here. So we have some resistance. Here we have support. Why? Price bounced upward after coming down here. Okay. Then let's look at this area also. This area, price came, when it got down here, it bounced up. So that became a support. And then we can see another support somewhere here. Okay, price came down and bounced up. So that's a confirmed support, right? We can continue and say this is another support here. Why? Because price also bounced up after coming down. You can see it, right? And then we can go on and on and on and on and on and on. You know, we can go on and on and on and on like that. Okay. So let me stop here. So let's look at this. Let's just look at what I'm saying. Support becoming resistance. Support becoming what? Resistance. So this guy here is a support here. Is a resistance here, right? R resistance. And here it was a support. But look at it. Let's look at how when price broke through, what happened? Oh, so then here price broke the support. So here we have the support, right? This is the price. This is the price level 1.2706, and then price broke through it, right? And then it went all the way back, and it became a resistance. Can you see it? It was a support here. Price broke through that support, and then when it came here, it became a resistance, right? And that's why you saw price reacted in that at that level, and then it came down. Then when it got here, this is another support here. Price again broke through it. You can see price breaking through it. Here, price broke through it there, and then it went in the future. It came back to become a resistance, right? Again, look at it again here. Support. Eventually, we have price broken through it here, right? Price broke through it there, and in the future, that level became a resistance. Look at it again here. A support. Support. Here, price broke through it. Later in the future, it came to that same level, and it became a resistance. So that's one thing I want you to know. If you can understand this as simple as I've analyzed it this way, you know the rule of trading. The principle of trading is buy at a support, sell at a resistance. Buy at a support, sell at a resistance. What that means is, given this analysis, okay, given this analysis, it means we could have bought here, sold there, bought here, sold there, bought here, sold there, bought here, sold there. So everywhere we see a support is a place to place a buy. Anywhere we see a resistance is a place to place a sell. But here is it. Is it just as simple as I have said, described it or analyzed it? Do I just buy every time there is a support? No. There are mechanical conditions that you must identify that will tell you whether you are good to buy at a support or you are good to sell at a resistance. Okay, so but we know, as far as support and resistance is concerned, we always have the structure of support and resistance. When the support is broken, it becomes a resistance. When a resistance is broken, it becomes a support. So when market is in a downtrend, the support will always be the level that will be taken out by price. It will always be the level that will be taken out by price. And that's why you always have new opportunity to sell whenever a support is broken, because you sell at a resistance and you buy at a support. So let me quickly show you in a market that is trending up. What do we have? Yeah, let's look at this. Good. Let's look at this. Good on. Okay. So here we have a resistance. Okay, there's a resistance here. Price, came down, and then there's a resistance here too. You can see all this level resistance here. You have a resistance here. We have a resistance here. Okay, I can just identify this level, and then here we have a support. Here we have a support. Okay, so let's look at here. Let's start with this guy here. So here we have this resistance here, because price basically went down out when it got to this level, and then eventually the price breaks this resistance, right? It went up and came back into it. That resistance became a support. Okay, and then we have similar move here. So we have a resistance here. Price tried to break it here. It rejected. So resistance is still a resistance here. Eventually, price broke through this resistance here, guys. And then when price came back, it failed to be a support. But instead, this guy here became a support, this same level that was support before. But by the time it eventually came back to break it, so this is like the second time it's breaking it, and it went up, it became a support eventually. So it became a valid support, level. And then price, this new guy here, became a resistance. And then we see price breaking through it. And then whenever it came back, we expected it to be a support, but it did not hold. We had this break, but again, this break was a false break. We call it false break, FB. Why? Because after it broke through, it did not continue to come down. Instead, it reversed and then continued to go up. And then again, we have a resistance here. And then for this resistance, we expect that in the future, whenever price would get back to this same level, to become a support. And that's what exactly happened. When price got back to this same level in the future, it became a support and it went up. Okay, so you see, this principle of support and resistance really work. Is a concept that really works, but is it like 100%? So you always see instances where a broken resistance does not hold as a support, or a broken support does not hold as a resistance whenever price returns back to that level. But a lot of time, you always have this structure in the market where depending on whether the market is going in an uptrend or a downtrend. Okay, but I just need you to understand that there's what you call support and resistance as far as market structure is concerned, and it's a critical part of our trading. Okay, yeah. Did you get that before I continue? So I haven't discussed support and resistance. It's a recap. Don't forget, we already have videos on support and resistance. You can rewatch. But this is a recap, and then I'll give you the assignment. So let's look quickly. Talked about the concept of trend analysis, and I told you about trend. Trend basically shows you the direction of the market over a period of time. It shows you whether market is going up or market is going down over a given period of time. So, but how do we, when it comes to trading, you always want to the trend is your friend. Always trade in line with the trend. If the market is trending upward, there's no business looking for a sell in an uptrend market, because if you are selling in an uptrend market, you will basically be doing what we call counter trend trading. And if you are not an expert at it, you may have your hand burnt. Okay, so we started with this, that price always have three major movements. It has an impulse, it has a correction, and it has sideways movement. So it moves up, it moves down, and then moves sideways. That's how price moves. Price move up, moves down, and then what we call sideways movement. So whenever price is moving an upward trend, it establishes a trend. Okay, when price is moving up, it establishes a trend. So you will have something like this. It goes up with an impulse move, then comes back with a correction, right? Remember, we talked about that three movement of price. Yeah, impulse, correction, and sideways movement or range. Okay, so now for an uptrend to happen, there has to be another impulse, then a correction. What we call impulse is the big swing or the big move of price in the given direction. While the correction is the short, move of price, basically correcting. But sometimes the correction can be, can be price may correct at different rates, of an impulse move. So then we have this impulse, then we have this correction, we have this impulse, we have this correction, we have this impulse, we have this correction. Okay, so now you can see. So we said when it comes to that uptrend, you will always have a low in the market. Okay, there will always be a low in the market of price. So there's a low that is the origin of a trend move. That's the low is the origin of an uptrend move. Then we say we're going to have what we call the I, right? We have the I. So in an uptrend, the trend begins from a low level, it moves to a high, and then it corrects to a what we call a higher low. Why is it higher low? Because the low is higher than this previous low. So we have what we call higher low, guys. So we have what we call higher low. So we have higher low here. And then price always move from higher low. The next impulse is going to move from a higher low to a higher high, meaning that the high is higher than the previous high, and the previous high is this guy here. Okay, so the next high is higher than the high, so we have this higher high. And then the next thing you are going to have for an uptrend to be established is you keep having this series of higher low, higher high, higher low, okay, higher high, higher low, okay, and of course higher high. So this indicates that the trend is moving upward. Okay, don't forget this, guys, don't forget this. So you can see the trend is going upward. If you connect all the lows, you can see you can see that the trajectory or the direction of price is upward. So this is an uptrend. So in an uptrend, you will always see price moving from a low to a high, to a higher low, to a higher high, higher low, higher high, higher low, higher high. Okay, don't forget that. Now, when it comes to a downtrend, it's the origin of a downtrend starts from a high. Okay, it starts from a high with the impulse, the low with the correction, and the low, high to low, high, low, high. So it moves from high to low, something like what I'm showing you right now. Okay, so something like this. So you are for a downtrend, the origin of a downtrend starts with a high and then to a low. So you have the impulse move of a downtrend is high to low. impulse move of an uptrend is from low to high. So for a downtrend, that journey starts from a high to low. That means that price over a period of time is going down. That's a downtrend. Uptrend, price over a period of time is going up. That's uptrend. Okay. So we now have, we have a movement of price from high to low, then from low to a lower high, what we call lower high. Okay. So lower high, it corrects to a lower high, then from a lower high to what we call lower low, lower low. So okay, so this lower low, then we have another correction from a lower low to a lower high, then we have an impulse from a lower high to a lower low, okay, and then a correction from a lower low to a lower high. Okay, don't forget, impulse from a lower high to a lower low. That's the way you establish a downtrend. Then when you pick all the highs and you connect them, you see that the price is really indeed showing a downward trend. Okay, so when it comes to trading trend, guys, I want you to remember that just like the principle of trading is, don't forget, you can see that the principle of trading, buy low, sell high, runs through the entire concept of the market structure, whether it is support and resistance or it is trend. So look at it. So in an uptrend where price is going up, you always buy the lows. Buy. So all you are looking for in an uptrend is where to buy. The lower lows, the higher lows, the lows. That's so we don't have to sell there. We don't have to sell on all the highs, okay? Except we are masters. Then when it comes to downtrend, you sell the highs. You sell the highs. Sell the highs. When it comes to a downtrend, always sell the highs. So we have high, lower high. You sell from all the lower high. That's the only way you can, the best way you can maximize your trade, and you can make some good profit. So when it comes to an uptrend, you buy the lows. When it comes to a downtrend, you sell the highs. So what do we do? Let's go to the charts now. This is a downtrend. This is an established downtrend, guys. Okay. This is an established downtrend. And let me show. Look, the journey started from here, guys. Okay. So we have this move. That's the impulse correction, right? Impulse correction. Okay, the next one we have here is this impulse correction. Let me stop here, guys. So what you see in a downtrend, for example, from this example is this. I want you to pay attention. Okay, let me come back to our diagram. So when it comes to a downtrend, you want to see price break the previous low. Don't forget, you want to see price breaking the previous low. Make sure that price is breaking the previous low. Make sure that price breaks here, guys. So this is like this is the low. So when price breaks this low, okay, then selling here becomes valid. Price breaks this low, wait for the impulse moving from lower high to a lower low must break the previous low. So once it breaks this low, you wait for it to create a lower high, and that's where you sell from. So we always want to see price breaking the lows, okay, and then you wait for the correction to be complete, and then you sell from a lower high to a lower low in that impulse move. The same thing applies to a buy, I mean an uptrend. You want to see price breaking the highs. So when this impulse move from a higher low to a higher high breaks the high, the previous high, you wait for the correction to buy here. Okay, it has to happen here again. Wait for the correction, then you buy. It breaks this high, wait for the correction, then you buy. It breaks this high here, wait for the correction to the downside, and then you buy. So that is how we trade trend. Now let me give you a scenario, but let's assume that price comes and fails to break this low. You know, this is the new low, but maybe it just comes like this, and then it goes up and break this new high. I mean, an high has been established. It is suggesting a change in the direction of that trend. That means we are about to see a redirection or a change in the trend. We are about to see, you know, something different. So we're going to see this, and then, so this is what I'm saying. For the downtrend to continue, it's supposed to break this low. But if it comes and if it doesn't break this low, but instead it comes this way, and then it now gives you this high and breaks this high, and then once it breaks this high, you can see that you can see that the trend is about to change. It's going to come back and give us a correction, and then it's going to go up. So there has been a change in the trend. So you can see. So once price fails to break a low, and then it comes, we call this flip, you know. So it's going to come here, create a high, and then when price moves up, breaking this high, okay, it's going to correct to give us a correction in low, okay, and then we're going to have this new high. That's one. So once this new high is broken, it's establishing that the trend is changing to an upside, okay. So now you realize that all of a sudden we have a lower low here, right? And then all of a sudden you're going to see that we have what you call it here. We have a high, and then this guy here becomes the new low. Can you see? Low, high. So it's going to be, sorry, sorry, let me move it. This is the high. So this guy here is still a lower high, okay? This guy here is still lower high because it's still lower than this. So, but now it did not give us this lower high. Is supposed to give us a lower low for the downtrend to continue, but it did not give us a lower low. Instead, it gave us a new low, okay? It's not a lower low because it didn't break. So now you can see a movement and established uptrend pattern from a low to a high, and then from a high to a higher low, okay, to a higher low, and then this higher low has to give us an impulse move to give us a higher high. So if this guy successfully gives us a higher high, then the uptrend has begun. So we now have new series of lower, higher low, higher high, higher low, higher high. Okay, so it's the same scenario in a buy situation. So in a buy situation, market comes, it's supposed to come, create a higher low, then come here and break for the trend upward to continue. But if it does not break this high, either it gives us a new high, okay, something like this, and then price now comes and breaks this low here, then there may be a new direction in the movement, in the trend. Okay, so that's it. So here we are supposed to have, for the trend to continue, we are supposed to have price move from here. It's supposed to move and break above this guy, but if it doesn't break, okay, and it gives you this kind of move here, giving us, we have higher low, right? Higher low here. It's supposed, this higher low is supposed to create higher high, but if it's instead what it gives us is a high, then it's suggesting that there may be a likely change. But for the change in the trend to be confirmed, there has to be a break of this low, higher low here. Okay, now finally price comes and breaks this higher low, and then it gives us a low, right? Because we no longer have higher low, we now have a low. So we have a low here, and then it goes up and gives us a lower high, and then the lower high gives us the impulse move that creates a lower low, and then you can see that the downtrend has continued. Okay, so that's the way it is, guys. So that's the way it is. So now let me get off and let's show it here. So now look at it. Look at what's going on. Let's look at what's happened here for a minute. Okay, let's look at what happened here. So from here you can see the uptrend has been established, and you can see series of from a low to a high to a higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. You have higher low here. You see what I said? So momentarily there was a change in trend there. Let's stop here for a moment. So we've been having this low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So, and you can see in all the highs in this scenario, you can see that the high is being broken. Okay, so it's broken here. It's broken here. Abi? The high is being broken. It's broken here. And then it's right. So this break here, it went up and then it pulls back. That's the retracement. And the retracement went all the way up, breaks this new high, okay, and then created a higher high, and then we have this higher low. This higher low again breaks this higher high, so we have this guy to watch out there, and it pulls back. The pullback broke this higher high again, right? This higher lower high or higher low, and then it came here and gave us this new higher high. But look at what happened when price came down here. It was supposed to what do you call it? It was supposed to come down, yes, give us a higher low, right, and go up to give us a higher high, but it didn't happen. It just gave us a new high. And then the next thing you saw that happened, why this market sold for him, the trend changed to itself for a moment, but that this low now become broken, and then this low went and gave us a, so we have now what we have is higher high, right, higher low. We now have high, and then we have low here. So once we have this low, price then did something. So we have this low here. It now gave us higher low. Lower high, lower low. Okay, you can see it here. So we have this high to low, lower high, lower low. Okay, so but then for this trend again, for this this short indicated reversal of trend to be sustainable, that market is no longer going upward. I mean, going upward, we are going to continue to have a downtrend. We are supposed to see something like this. market pulls up, create a lower high, and it's supposed to come and break this guy and continue like this, but that didn't happen. Instead, what did we have? We have price went up, created a lower high truly, but then again, just like I told you, did not break. Instead, created a new low, and then we have high. Then we have higher low again, right? Higher high, higher low, higher high, higher low. And then that trend continued all the way till we got here, uptrend. But the trend really changed again here. By the time we got here, you see what happened, guys? See what happened? By the time we got here, price gave us this higher high, gave us a higher low. It was supposed to, this higher low is supposed to break this higher high to continue the uptrend. But instead, again, what did we have? We have a low, that a high that is lower than this higher. So this is now a high. Now this high went all the way here and gave us a low, okay? And then we have a lower high. Now, the good thing is that you see this lower high eventually breaks this high here. This low rather, it breaks this low here, and then it confirms that the downtrend is about to continue. So breaks this and gave us a lower low, came back, gave us a lower high, breaks this low again to continue the downtrend. So we have here a lower low again, we have a lower high again, and then for the trend to continue, what do we want to see again? A break of this lower low. Eventually we had that break, and then it broke it, and then it created another lower high. Now this lower high is supposed to give us another lower low, right? This is supposed to give us another lower low, and I think this is what we have. We have momentarily, we have this move here, but eventually it broke through. Okay, it broke through eventually. We have all this little movement of, but they're indicating that price is going downward still. So sometimes you may have this kind of swing move. Sometimes you just have these little steps, you know, but going in the direction. Okay, so we have this low here, lower low here, that was broken, and the moment it was broken here, it came, this guy became the new lower low, lower high, lower low. Then you can see it was broken. This place became the new lower low. Eventually it was broken, so the downtrend continues. Okay, so like I said, for you to trade a downtrend, you have to see that a lower low is broken and price retraces back. So it is we only sell where we have this kind of, so these are the kind of places we sell. Okay, where we sell at the lower highs. We sell when price retraces into the lower high. That's where we sell. That's where you get your opportunity to sell. Okay, and then you see you are a friend of the trend. You're a friend of the trend, or the trend is your friend. And then as long as you're selling the lower highs in a downtrend, you will always make money. You will always make money. But again, like I said, I want you to understand that you need some additional strategy or additional mechanical condition that is going to tell you that, oh yeah, it's time to sell. It's time to sell. And that's where we need our price candlesticks, price action. We talked about that, I think, in module 3 or 2 or so. So that's where we talk about candlestick price action. We need those information, other mechanical conditions to be able to say, okay, now I can sell here, I can sell here, I can sell here, I can sell here, I can sell here. But always remember, when it comes to a trend, when it comes to trading trend, number one, never trade against the trend. Number two, wait for a break of a structure in a trend and execute your transaction at the opposite end of that move. So what that means is that if you're in a downtrend and a low is broken, you wait for price to move in the opposite direction, that is to buy by buy in a pullback, and then you sell at the end of that pullback. If another structure that is a low is broken, wait for price to pull back, then you sell at the end of that pullback for the next impulse. The same thing for a buy. Wait for a break of a high, that is the structure, and then wait for the pullback in the opposite direction, that is price will sell a bit. So in an uptrend, okay, so wait for price to sell a bit. When price sells and at the end of that pullback, you buy. Okay, you buy at the end of that pullback. You buy. That's the way this thing has to work. That's the way you make money. If you understand this principle, you're going to have opportunity to make a lot of money trading. Okay, is it every time you're going to get it spot on? No. Okay, maybe for example, here you could have bought and you'd have bought a bit, you'd have made some little profit, but if you have not taken your profit early, at the right time, you're most likely going to have this kind of scenario where price actually reverses all the way back and went into a loss. But then you can see the recovery. As long as market is still in an uptrend, you can see the recovery. Price eventually recovered and it continued in the uptrend. But like I said, the logic is this: buy in an uptrend, wait for a break of a high or higher high, as the case may be. Ensure you see a break of a high. Wait for the price to sell back by retracing back or by pulling back in a sell. Then at the end of that pullback, that's when you buy. And then in a downtrend market, wait for price to break the low structures, the lower lows, okay? And then wait for price to pull back in a buy. At the end of that buy pullback or bullish pullback, you sell, and then you make profit. Okay? Yes. So that is that for today. That is that for today. So let me quickly run you through your assignments. Okay. So what's your assignment? Good. You're going to pick nothing less than 3 trading pairs, and these 3 trading pairs, you're going to mark out the areas of support and areas of resistance, and then you have another 3 trading pairs, different ones, and you're going to mark out the trend, identify whether the trend is bullish or whether the trend is bearish, whether the trend is going up or whether the trend is coming down. Okay, so you have to submit this assignment on the group on or before the next class, which is Wednesday 9 p.m. Okay, so that's going to be all for tonight. I'll be seeing you in the next class with your going through your assignment, reviewing your assignment, and then from there we go on to our next topic, which is zones. Thank you guys. Good to have you on the call. Enjoy a wonderful night rest.